Check, check, check. Hey, everybody. Hey, everybody. Let's see what we've got here today. Well, okay, so I'm going to give people a couple minutes to show up. Oh, hey, Bill. Give folks just another minute here. So, welcome everybody. So as always, is for information, educational purposes only, not advice. It is your trade, your responsibility. If you act on anything today. So I just want to talk about the last few weeks. I've been saying I'm really trimming some of these mag stocks just because they seem to be more in the eye of the storm. Not always in a negative way. They have, obviously they have positives. If you think of a stock like Google, and I mentioned this yesterday on a show, I said, you think of something like Google's way to potentially cannibalize their business. So remember, AI was supposed to cannibalize search, and they turned that around. It's doing okay. It didn't do that, but it is, because if you listen to what some of their customers are saying, so some of the publishers are saying our organic traffic's down 50%, and so the point isn't that Google isn't figuring out ways around certain challenges, but at some point it's going to come home to roost. So if you now, it used to be that you went and searched and you looked for something on Google, you said, okay, I want to go to USA. What's a good place to go for some news? USA Today pops up. You go over to USA Today, and now you're on their website, and they have advertisers. Your eyeballs are on their assets, and you're looking at things, and they benefit from your participation in their ecosystem. Now you don't do that anymore, right? You just go to AI, you say, well, I want to know what's going on, and AI goes out and it pulls from all these different sources. And so these publishers are saying our activity is down 50%. And so that's a problem, right? That's a problem. You're not going to pay, you're not going to have an advertising spend of the same kind of caliber, or at least the same way, because of things like that. So Google's got that, and then it's going to bring in these open source models and host them. And that's going to make it difficult for companies in the world, but with lots of different spokes, but also things that are challenging, that are in conflict. And so, okay, a bunch of people showing up. So thanks for showing up, everybody, today. I am Hans Albrecht. I've managed $1 billion in option strategies, a whole bunch of income funds and black swan funds and things like that, pro market maker. So thanks for coming again. It's your trade, your responsibility. So we're just talking about the MAG 7, which has really become the lag 7. And what's happening is really that we have a problem. We thought this was going to be a potential pullback in capex, right? We were hopeful, maybe not semiconductor investors, but we were hopeful that maybe for these companies, they would say, well, listen, we're gonna sort of apply some fiscal responsibility a little bit from a capex side. Capex is how much money you're spending on building out your infrastructure and everything, whether it's compute, GPUs, data centers, power. So and basically Google said, no, we're going to increase our spending. So the problem is you have this free cash flow plunging. This is old now, right? This needs to be updated because Alphabet has actually gone negative, right? It's gone to negative free cash flow as of yesterday. They said that. Amazon's already negative, or Oracle's in terrible shape. I'm short that thing through puts and put spreads. a lot of these companies, Amazon is negative as well. You can see they've gone negative. So they keep spending and spending. And so I think the problem here with this is that they are going to, this is going to look like dead money to a lot of people, right? The idea was that, okay, what if they show a little bit of restraint and we get back to free cash flow, we get back to buybacks? Buybacks really happening because you need free cash flow. They're spending it all investments. And then you've got this Chinese model, been around, Moonshot, which is the Kimi K3. They've been around for 3 years. They come in, they've barely been around on a shoestring budget relative to yours. They come up with performance that is, in some ways, right? This is just one benchmark, but number one on the front end code arena. So notice what's here. Oh, I can't really make this bigger, but let me see. You can see Kimi can basically steal your stuff. They steal things from OpenAI, all that stuff. Yeah, let's take a look at that in a sec, Jay. But look at these things. And so everyone's kind of going, well, maybe you should maybe cut back a little bit. Are you getting the ROI? And I think the problem for them is maybe they can't cut back because what they're really investing in for many of them is compute. There's not enough compute. And if anything, and I said this a few days ago, I said, it's quite possible we could see the opposite. We could see the hyperscalers say, we may have to spend more money because we've got to keep up with China, and number two, sort of over to host in the US because they don't get hosted over there. Not for most businesses and people who can use this properly. You bring it over. Jim Cramer said, "Oh, we don't want to give all our info to China." I don't know what he's reading, but that's not how open source works. You bring them over, you customize them, you have them hosted by Amazon or Google, right? That's going to be a business for these guys. I think it's going to be a really good business for Amazon. I had a little exposure to Amazon, but I want to add more. So they're going to be hosting these things. And what does that mean? Well, it means you've got cheap models that almost cost nothing. At some point, they'll cost nothing. At this point, Kimi is extremely inefficient. So even though it's cheaper per token, it's actually quite expensive. It's more expensive than it looks because you need to use more tokens per task. So, but that's going to change with equipment, with improvements to the model. You're going to see that come down. So your cost per task is going to be a fraction of what it would be on Anthropic, on OpenAI. What happens when you do something like that? What happens when you lower the cost? You give more people access to cheap intelligence that can eventually be run. Smaller models that can do more you'll be able to run them on anything. You'll be able to run them on your Alexa. You'll be able to run them on decent ones on your phone. What happens when you give everyone intelligence? What demands happen in the infrastructure of AI? Can anyone tell me what are the demands if you give people the access to almost maybe not unlimited because we're going to run into bottlenecks, but incredibly cheap and plentiful AI? What do people do when you give them that? You get more compute demand, right? This is the perfect example of Jevons paradox, which means you make something more accessible and cheaper, and people just want more and more of it, right? Drop the price on anything you love. Yeah, for sure. You're going to need to audit the Chinese code, even if it's locally hosted. But I agree, Tommy. But this is going to happen, right? So remember to never think in the here and now. Think of what does this look like in a bit. And so people are definitely going to like the wrapper. They're going to like the gateways that a Claude has, right? And they're going to like a style. Look, I like Claude. It's going to take a lot to pull me away from Claude. But once you start giving businesses the ability to have similar levels of intelligence, maybe not for everything, you'll need the best for some things. A drug company is not going to go cheap out, right? But eventually use, and then they're going to be locally hosted. And that just means there's going to be more token demand. There's more AI demand. There's nothing but more. So look at what's happening today. What have I been saying the last few days? I've been saying the things that have to win are memory, storage, that some of the build out thing faster and being more efficient, right? Fiber glass is going to be important for that. Uh, Um, so I think there's some interesting. Also, some of the data layers I think are interesting as well. But when I start veering into software, like I think Snow and Datadog, I think those guys are going to do well. I always have to be a little hesitant when it comes to software because we're getting to the point where we can kind of one shot anything. But they have pretty good modes. So the problem is you really the tech trade has become even more narrow, and I presented this on a couple of shows this morning already. So here's your QQQ. So these are the things in my mind to think about. What have we had lately? We've had a 16 VIX. And a lot of people have asked me, well, why is the VIX 16 when there's all this stuff going on? You just had a 35% sell-off in momentum stocks, and the S&P was the SPY was near its all-time highs, right? And the SPY was near all-time highs. Here's your SPY. Let's take a look at this. Of momentum sell-off was in here. SPY almost to all-time highs. So the VIX is the S&P 500, right? That's important to keep in mind. You have to understand what you're looking at. It's S&P 500 fear gauge, cost to insure the S&P 500. Think of it that way broadly. For 30 days. So it doesn't tell you what people are thinking 6 months out. It tells you what people are thinking right now over the next few weeks, where the VIX futures are a bet on where we think the VIX is going to be. So a lot of those VIX products are VIX futures based. All of them, basically. It has been rather orderly, and it's been what I call the rotation market. So above, I'm going to make this a little bit bigger. Q up in the 7 into other things, and that's exactly what we've seen, right? So if I look at, forgive me if some of you guys have seen some of these things before, but these are just so incredibly important. Oh, look at this. This is data center demand is going to reach. I mean, I don't know where this power is going to come from. So I think there's an opportunity in power. But this, you bring in cheap models, right? The cheaper chicken, as Steve Martin says in Father of the Bride, I want the cheaper chicken. So everyone's going to grab the cheaper chicken, and that's going to mean more demand on compute. There will be efficiencies, but we'll worry about that later. But the point is that we're really in a world where we have a wonderful broadening. Look at this broadening. Beautiful. Stocks are doing great, even when the S&P comes off. I'll tell you who loves this kind of market. It's probably a lot of portfolio managers, because Mag 7 heavily weighted stocks are no longer pulling all the weight in the market. It's now other things, right? So on down days, we're getting a lot of other stocks doing fantastic. We're at a 20-year high in the number. Important. So the broadening has happened. Don't let anybody tell you this is not a broad market. It is absolutely a broad market. Could be a little better, right? There's some sectors that maybe aren't doing as well, but make no mistake, it's for sure better than it looks. But in the world of tech, we are more and more narrow. Now the mags are getting smoked because people are tired of the capex, not because these companies aren't good. I think Google's incredible. Stuff affects things, and that's the or is this a good story? Remember, you always have to put on the hat of, is this a good story now versus is this a good story later? So there could be a good story. It's kind of like looking at the VIX. It doesn't tell you what the market feels risk is 6 months from now. It's short term. There are stories that are strong, but later, right? When these guys slow down on their spend, they're going to be very, very want to sit in things that are going to spin their wheels, right? Oh, thank you. Thank you. Thank you guys. I appreciate that, James. Just trying to help people stay on the right side of things. I've been saying the last few weeks, if you guys have been in the community, and we have members here, so I'm not making this up. I've been saying I'm trimming weeks ago. I said I'm getting probably 2 weeks ago. I said I'm getting rid of Mag 7s, except for Apple, which is one of my favorite stocks this year. And Nvidia, I've been kind of on the fence with because it is cheap and it's in the right place at the right time for this. So I do like it, and it's got a good valuation, right? It's trading at 5-6 year lows from a valuation standpoint, and I think they stand to benefit. But that's a very competitive area now. You've got Google with a new efficient chip. You've got Trainium chips from Amazon, which are like 30 or 40% more efficient, right? So that whole space is very cutthroat, and it's getting more competitive. However, NVIDIA is doing so many of the right things. Jensen's kind of brilliant, right? He's in the right place at the right time with GPUs and video games and now AI, but he's brilliant, and he's building racks now. He's getting more into inference. He's got small devices that are going to run models. He's got a open source model. So I do like it, but if it's just in a more competitive area. I think memory is more the clear kind of winner, because nonstop compute demand just means more demand for, HBM, DRAM, all these things, right? And then storage and, some of those names that I really like. So you can get my full list. If you join Leaps Trader, you can get the full list of what I think is going to do great over the months of 2026, and really for years, I believe. A lot of great stuff in there. It's not all the same stuff, right? Dangerous. I think software is still pretty dangerous, but not all of it. Actually, I see some of the cybersecurity that this is going to get, this landscape of AI is going to get more and more treacherous. They're going to cyber and scamming on a level we've never seen before. So I think it's of data and things like that. So I think that's an interesting area that could continue to do well. But the problem is, let's go back to this. Now we got a beautiful 9 in line rejection, right? Here's the 9 AMA, and here is the line, right? So you got this line that I've had drawn forever, and we came, boom, hit our head down, boom, tried to push a new high, and now we're rejecting on the Mag 7 sell-off, right? That's what's really kind of killing the market today, because that's going to be dead money. So again, it's not bad stories, all of them. It's that people are worried the spend is just going to go on and on. Basically, what Google said yesterday, I translate into kind of to make this bigger here. So basically in here, we've got a VIX 16, and down here, we have a different situation. So if we start to push lower and things get worse, we go from the rotation market of VIX 16, which makes sense, to a more highly correlated market, which means suddenly more things start to sell off. You get a drop in the names that are doing okay each day, and things start to correlate, right? We know what correlation is. In a severe sell-off, everything correlates together. They correlate to one, and things get really ugly. So this is, and then this again, members asked me, well, what's going to get the VIX going? I said 690, down below 690 into the 680s. Here you see today VIX jumping 3 today. So up in here, if we regain that 700 level with some confidence, we're going to see the VIX be a little bit of a nervous market. We can see that some of the memory names are doing fine because we're just not going to have enough memory. We're going to be in such short supply on the memory side. It's going to be incredible until somebody comes up with a solution, which is very difficult in the area of memory. There are a couple of stocks coming. Apple's working with a company. Can't remember the symbol. But anyway, okay, I've got to hop to a meeting. I hope you guys enjoyed that. I'm going to post the recording later if any of you missed some of it. So take care. Check out leapstolove.com/guide. Leapstolove.com is our wonderful LEAPS program, and then there's a free guide in there. There's so much free stuff that I give away. So check it out, and we will see you guys in the next show.